Imagine a gold mine that halves its output every 4 years. What do you think would happen to the price of gold? This is exactly the scenario in the world of Bitcoin. Intrigued? Welcome to the mysterious world of Bitcoin halving. In the digital gold mine of Bitcoin, every 4 years, a fascinating event occurs. It's called the halving. Much like the scenario of a gold mine reducing its output, Bitcoin too reduces its block reward by half, dwindling the rate of new Bitcoin generation. This event is not just another happening in the crypto calendar, it's a significant turning point that has historically led to price increases, heightened trading volumes, and market volatility. It's a phenomenon that could potentially influence market dynamics, with effects rippling out to miners, investors, and even the creation of Bitcoin-related memes. The upcoming halving in April 2024 is anticipated to be the most influential yet. With the backdrop of regulatory developments, approval of spot Bitcoin ETFs, and increased adoption by nations and corporations, the stage is set for an exciting time in the Bitcoin ecosystem. Yet, amidst the anticipation, it's important to remember that the halving presents challenges too, particularly for miners who may face difficulties in coping with reduced rewards. So, let's dive into the intriguing world of Bitcoin halving. Bitcoin halving, in simple terms, is a process where the reward for mining new blocks is halved, meaning that miners receive 50% fewer Bitcoins for verifying transactions. But what does this mean really? Let's break it down. Imagine a gold mine where over time the amount of gold you can extract becomes less and less. Bitcoin mining is similar. When Bitcoin was first created, miners received 50 Bitcoins for each block they mined. This reward has been halved 3 times already, and come April 2024, it's set to halve again, reducing the reward from 6.25 Bitcoins to just 3.125. But why does this happen? It's all by design. The Bitcoin protocol was written in such a way that this halving event occurs approximately every 4 years. The aim is to control the supply of new Bitcoins entering the market, mimicking the rate at which commodities like gold are mined from the earth. This scarcity is one of the factors that gives Bitcoin its value. Now, the halving event is a significant moment in Bitcoin's history. It directly impacts the miners, who are essential to the Bitcoin network. They use powerful computers to solve complex mathematical problems, validating transactions and securing the network. With the halving, their reward for this crucial work decreases, which can make mining less profitable, especially for smaller operations. But it's not just about the miners. The halving event also has wider implications. Historically, it's led to increased trading volume, market volatility, and often a surge in the price of Bitcoin. It's a period when market sentiment tends to become euphoric, and the creation of Bitcoin-related memes typically surges. Now, you might be wondering, how does this affect the Bitcoin market and you as an investor or enthusiast? Historically, Bitcoin halving events have led to significant price increases, heightened trading volumes, and market volatility. Let's delve into why this happens. Every 4 years, the Bitcoin network undergoes what's known as a halving. This is when the reward for mining new blocks is halved, meaning that less new Bitcoin is generated. As supply drops, the demand for Bitcoin tends to remain steady or even increase, causing prices to rise. This is a classic case of supply and demand at work. In addition to price increases, halving events also bring about a surge in trading volumes. The anticipation of a price increase leads many to buy Bitcoin, hoping to cash in on potential profits. This heightened activity often leads to increased market volatility, as prices can swing widely in a short period. But it's not all rosy. The halving can pose significant challenges for Bitcoin miners. The reduced block reward means that miners earn less for their efforts. This could potentially lead to smaller miners shutting down, unable to cover their operational costs. Larger mining companies with access to capital markets may be able to weather the storm, but the landscape of the mining industry could drastically change post-halving. The halving event also triggers a wave of excitement in the crypto community. Market sentiment tends to become euphoric, and the creation of Bitcoin-related memes typically surges during this period. This enthusiasm often translates into increased crypto transactions, investment, and hiring in the industry. So, will the 2024 halving follow the same pattern? Only time will tell.
The 2024 halving is expected to be the most significant so far, with factors like increased adoption by nations and corporations and regulatory developments playing a role. This event will decrease the rate of new Bitcoin generation, potentially influencing market dynamics. Historically, these halvings have led to price increases and market volatility. Post-halving, larger mining companies might access capital markets, while smaller miners may face the risk of shutting down. The halving is anticipated to spur increased crypto transactions, trading volume, investment, and even hiring in the industry. The world of Bitcoin is full of surprises, and the halving is one of the most exciting events to look forward to. Whether you're an investor, a crypto enthusiast, or someone intrigued by the world of digital currencies, the Bitcoin halving is a pivotal event to observe. It's a testament to the ever-evolving nature of this industry and how it's reshaping our understanding of money. To stay updated on the latest developments, insights, and contrarian views on Bitcoin, money, and saving, visit BIGPriceDrops.com. By staying informed, you stay ahead of the curve. Embrace the crypto revolution and let's navigate the future of finance together.